Get ready! This episode is about how to manage your money, how to live debt-free, and how to use a P&L to manage your budget. I'll share with you an easy template that you can use, which will also build your Excel skills. And after this episode, you'll know how to build your own personal P&L as well as your net worth. Stay tuned. Hello and welcome to Rockstar Manager. I'm Dr. K, the management professor, and this episode is all about how to manage your money, how to live debt-free, and how to use a P&L to manage your budget. First, please subscribe to my channel by hitting the subscribe button down below, and also hit the notifications button so you'll see each time that I post a new video. While you're doing that, full disclosure, I am not a financial advisor, but I do teach a personal finance course at my university, and I've taught financial courses at women's shelters. One skill every single person should have is how to manage his or her own money. Whether you like math or not, I think the concept of managing money is very simple. Either you have it or you don't. If you have it, great. Just know where you spend it so that you always have it. If you don't have it, we need to identify where it's going, who it's going to and why, and then what can you do to either increase your money coming in or decrease your money going out. Money coming in is known as income or revenue. Money going out is known as an expense or a payment. Income in this sense is your net income. This is what you get paid after taxes, benefits, and any other deduction. Gross income is the amount that you get paid before any of those deductions take place. We're going to focus on your net income since that's the money that you get to keep in your pocket. In general, your pay is your pay. You can adjust your benefits, but the most important deduction from your gross income is your contribution to your retirement account, at least from a savings standpoint. So whether that be your Roth IRA, your 401k, your 403b, etc., make sure you're making a contribution and see if your employer is matching that. Hopefully it's dollar for dollar. And just a side note, I highly recommend you have a Roth IRA. You can work towards bonuses, but bonuses are heavily taxed and often paid at about half the amount that you actually thought you would receive. So let's talk about your expenses. Some of your expenses will be fixed, some variable, and some spontaneous. Your fixed expenses are what you pay on a monthly basis that don't change in amount. In general, this will be your mortgage or rent, your car payments, your mobile payment, or for streaming services or student loans. Variable expenses include your gas bill, your electric bill, any grocery bills, etc. Now, your spontaneous expenses, those that are not previously accounted for, include a nice dinner out, a new outfit for an upcoming event, or even a weekend getaway. Now I'm going to show you how to build a budget in Excel so you can plan for the next rolling 12 months. This will include your income, expenses, and even help you recognize and forecast for special events like your mom's birthday, a wedding, or those cold winter months. Check it out. For disclosure purposes, I am not a financial advisor. I'm here to explain a P&L. Okay, if you start to use a P&L for your own personal finances, you'll never be one of those people who doesn't have any money or wonders where it all goes. You can create your own file in Excel. This example assumes that you have an annual salary of just under $50,000. Across the top are each of the 12 months. I have the first row in black, which is all money coming in, otherwise known as your revenue. Net income is the money you get paid after taxes and any other deductions. If you have more than one job or income source, you can break this out into multiple line items. All other lines you see in red are your expenses. If you're paying this, congratulations and welcome to being an adult. You'll notice the first line is your savings. The calculation is set at 10%, but feel free to adjust for your personal needs. This line is for you to pay yourself. If you don't do it in a separate account, nobody else will. Pay yourself first. This line is to begin to build your net worth. If you keep all of your money in your checking account, you are more likely to spend it. The next line is your savings emergency, also automatically calculated at 10%. What if your car breaks down or your refrigerator stops working? The last thing you want to do is take your life savings and spend it on a broken car, right? So create a separate space for your emergency savings. My recommendation is to have a goal for this emergency fund, then stop funding it when this goal is met. You can see what your expenses are by looking at this file, so have enough saved to manage all of your expenses for 1 year. Next are your home or living expenses. You want to have a line item for each: your mortgage or rent, your cable or streaming service, water bill, electric bill, gas bill, homeowners or renters insurance, groceries, etc. Take the average bill and populate these cells. For months that you know you may use more, like heat in November and December or January and February, increase that amount so you can properly forecast. The more accurate this file is, the better you can manage your money. Next are your car expenses: insurance, gas for your car. If you use a car service, notice that this file assumes you don't have a car payment, so you have to plan for that accordingly. Then you have expenses for your phone, fun money like grabbing a bite to eat with friends, thinking about spring break or going on a trip, and then you have credit cards that you would have to pay off as well. I will advise that if you can't pay off all of your credit cards in full by the end of each month, you shouldn't have a credit card. That means you're spending more than you're bringing in, and that's the fastest way to go into debt. The bottom line is your income minus your expenses. You'll notice that if the line is black, you spent less than you brought in, which is great. If the line is red, it means you need to be careful and you spent more than you brought in. On the far right, you'll have the annual column that totals all of the rolls for the year. I hope you found that explanation helpful and can use that example as a template to help you get started building wealth, managing your own money, and living debt-free. With that said, did you notice that the example that you just saw did not include a car payment? If you have to add in a car payment, what will you do to adjust your budget so that you are living within your means? You don't want to get in the habit of spending more money than you bring in, and car payments are usually made over the course of several years. Here's some food for thought just to get the juices flowing. You could consider getting a second job if your budget is that tight. You may want to review any non-contract type of obligations, such as monthly fees that you pay for streaming services, or even discipline yourself not to receive any food deliveries. That's the kind of mindset you want to have. For contractual obligations, I would look to see which is a need and which is a want. If you are struggling where to get some extra cash, eliminate those wants, those nice to haves, just for a little while until you can get your finances back on track. Once you know where your money is going, you won't wonder where it went. Having that mindset will set you up for personal financial success. Once that's under control, then you should start to look at other investment opportunities. They'll be there for you and you'll build a strong net worth. Hopefully you have a better understanding of a personal P&L and the value that it brings to your life. If you're interested in learning more about related managerial topics, you can find my book, Rockstar Manager, From Theory to Practice, at Barnes & Noble. Thanks for your time, be your best you, and be a rockstar manager.